Welcome everybody to this session in how to read order flow within the 5-minute time frame. Now this is going to be a 101 session on order flow, predominantly focusing on the 5-minute time frame. Now the reason we're focusing on the 5-minute time frame is because through our extensive amount of time spent on the charts, we have established that it will show you a higher time frame narrative while also giving you a very good overlook of the lower time frame and supplying detail to the higher time frames without having to deviate through the time frames. Now of course you can and you should use different time frames to gain a different perspective of any given price action, but today in this session we are going to teach you exactly how to read the major order flow within a 5-minute time frame, and then we're going to lead you on towards how to find manipulation points within the order flow, and then lead into how to read swings. So let's start things off with an explanation of exactly what order flow is. Now as always, you're going to get to see some of my amazing drawing skills through this session, and as I've said many times before, if you are learning this and you want people to learn with, then the link down below for the Discord is going to be the place for you. Lots of like-minded people to learn this system with, lots of people that are already very confident within this. So, first of all, we're going to talk about order flow as a whole and what it represents and what it is. Now, the main principle behind this is to understand the directional bias or the overall probability within a given trading session of what the market movements will be. Now reading the order flow itself isn't going to give you 100% accuracy of order flow and directional bias, but you will automatically, if you start applying this, you will straight away start seeing an improvement in your order flow and directional bias understanding. So to start things off, what is order flow and how is it created? Well, the main principle that we always focus on and we have stuck with for many hours of content is the same in this video. We have investments introduced to the market at given points, and these movements are a visual representation of these orders, okay? Now, many of you will look at this and immediately say, well, that's a trend, and that's exactly what it is. Order flow is a smaller time frame trend or a larger time frame trend. It all depends on your point of observation, but we're talking about the 5-minute here, so in this case it is a representation of the smaller time frame trend. The reason I say this is because over the space of a day, a week, a month, a year, you're going to see a consistent movement generally in one direction. So for example, for a year you may have a bullish move like this, and then through 3 of the months you may be moving bearish. Then the next 3 of the months you may be moving bullish, again, so on and so forth. So the same thing happens on a daily, hourly, and the minutes charts. You may have an hourly trend, but on the minutes you will have several hours of downwards movement before price changes and continues to move up. So again, it is the fractal nature of the market that this is representing. But all of the points that we teach you here will hold relevance through any time frame. So the key principle is to identify where the big banks are moving their liquidity from and to. Now whenever we're moving upwards, the highs are being served as liquid, meaning that they are being liquidated, therefore telling us at a given time the investments are moving up, okay, consistently planting their investment at the next low, giving you that upwards directional move, okay? Now, there are 2 different types of order flow, but they are both the same thing. So should I say 2 different aspects rather than 2 different types? The 2 aspects are the liquidity aspect of price and then the structural aspect of price. They both are very different, but they are both at the same time coming together to create what we know as our major order flow. So for example, the structure is a visual representation of these investments. Okay, so very, very simple. We are simply tracking the major players and their directional movements within the market, where their orders are flowing from and to. Okay, now this is an example right here of a bullish major order flow, and if you were to flip this on its head and reverse it, it would be the exactly the same thing, but for a bearish order flow. Okay, now the main principle here is that we are going to show you the difference in how an overall diagram is going to look compared to true price action. We all know that diagrams are also pretty and neat. In reality, they do not look like this when it comes to price action. Majority of the time, it's going to be a lot choppier. So the first thing we need to establish, okay, is how we identify where the highs and lows are within these movements. Now, the first thing that we're going to do is we're going to explain to you what we're looking for when it comes to structure, okay? And then we're going to start to explain to you what we need to see in terms of understanding when a structure is broken. So a valid breaker structure, therefore giving you a valid low or a valid high. Now, this is my honestly pretty amazing drawing right here of a candle. And we're just going to duplicate this a few times so we can then show you exactly what we mean, okay? So the main principle we need to focus on is where are the highs and lows within our ranges and within our structures. Now, whenever a high or low is created, so for example, right here, if we highlight this and we put this at a low, and at the moment here we're moving up technically, okay? And we have taken a structure to the left. So let's say that over here there is a structural high and we have broken out from this high. Now, before we go on to what we actually want to see, we're going to talk about what you need to have for a structural break to be valid. So remember, what we are focusing on is the order flow within the market. So we need to establish our range, break of the range, range, break of the range, right? We need to know when these ranges are actually broken or when a range remains. So this right here, okay, is a previous high. So it's exactly a point like that, and we've just drawn a line from it. So we have now broken this. Now, how do we know this is broken? Well, for the way that we look at price, the criteria for a break of structure, whether it's up or down, regardless of the actual order flow at the time, we need to see one 5-minute candle close fully above this, okay? So it doesn't mean just market close above and open be below. It means you need to see an open above and a close above. So a full candle needs to be above. Now, we're only worried about the body. The wicks do not count. So only a full body close will be classing this as a break of structure. Okay, and the same goes for the downside. If we were looking for a break structure to the downside, we would need to see something that looks a little like this. Okay, so let me just move here. So we're focusing on this being the high still. Oh, this is a pain in the butt. We're focusing on this being a high still. This high was taken out to the downside because we closed, in this case more than one, but we closed fully outside of here. Right? So we know that's a break structure. So that's all good, knowing that we have a break structure, but how do we identify where our high or low is forming? So what we've shown you up until now is a high that's already in place, and then price has come up and we've confirmed that this high has been broken. So we know that there is a break of structure to the upside. Now that's all good, but we're trying to identify the highs and lows of our 5-minute range, right? Because remember, we have to identify our high and low to know if the price action is broken down or up. And remember, a very key point here, the 5-minute order flow, as I covered earlier, is simply a smaller time frame representation of price action moving in a trending manner. And at some point, it will break down, giving you a higher time frame high or low, depending on where you are and what direction you break. So you need to establish your low and your high of your 5-minute ranges before you can really be confident applying this, okay? So this low right here was taken out. That's great. So we know we've got a break structure. So what we're going to do is we're going to get this out of the way right here. We're going to bring this beautiful break structure line across so we can use it full screen here, okay? And what we're going to be focusing on is how can we establish this line or this boundary point, so the range high or low, within the order flow, okay? So the main thing I want you to focus on is that we've already broken this high. This high has been broken here. We've had X amount of candles coming from underneath and price is closed above it, and we can now mark this very simply as a break of structure, okay? So BOS to the upside. All right, very simple. So now that we've discovered that this is a break structure to the upside, we now need to find out where our high is, okay? Once we've established our high, we can then look for the low. Now, if we try to establish our low before the high is put in place, we can end up being wrong, as you may find sometimes the low is formed directly underneath the high or vice versa. So we need to establish our high first so we can then work out where our low sits. So what we are waiting for is a 5-minute wick, a wick, not a body, that sits higher than the wick before it and the wick after it, okay? So it must sit higher than the wick before it and the wick after it. Doesn't matter if it's 1 pixel, doesn't matter if it's 1,000 points, doesn't matter how much of a gap it is. That is how we establish our high, okay? Once we've established our high, only then can we seek the low. So if we mark this as a 5-minute range high, okay, doesn't have to be labeled as high, but we know this is the high of the 5-minute range. We can then look back and find a low with the same principles in place. It must be lower than the candle that came before it and lower than the candle that comes after it. So right here, let's duplicate this and we'll give you a low. Okay, now remember that right there isn't a low. Why is it? Because we can't see the wick before it. So we're going to need to duplicate this again. And then this wick is going to sit just above it, right? So we know that this point now is our 5-minute low right here. Okay, so we now have a 5-minute range low and a 5-minute range high. Now this range will persist and remain the current range until we see a full body close outside of either the high or the low. Now, in most cases, when we create a bullish range like so, the general direction you will see price traveling in is up, okay? Most of the time you will see a close above this high. If you're skeptical about this, take notes on what I'm saying, learn what I'm teaching you, and then go and apply it to the charts, and you'll soon see how much weight this holds within the market. And I can promise you now, you are going to be surprised. We are, of course, going to go down to the live charts, and I will show you some examples. But right here, we have our newly established range. So what's next for us? Well, the next point is to wait for this range to be broken. Now, what we need to remember is price can stay within these confines here, high and low, for as long as it likes. Price can literally just do whatever it wants between these points. It can send, ginormous wicks out of here and then pull back in. as long as we don't have a body close, so a full candle open and close above a high or low, this range remains. Okay. Now, generally what you are going to see is the same thing repeat itself. So it will generally look a lot like this, where you'll have price coming, for example, up to the high a little bit, like so. Then you may have price traveling. If my PC would stop lagging, that'd be amazing. You see price traveling down somewhat. Of course, this is not what price looks like, because it's the most uniform thing ever. You see it traveling to the lower half, and then you'll see it push up and then eventually close outside of here. Okay, and that's where we can begin to establish our new range. So, couple of things to cover within these 5-minute ranges. They are tradable. We have released a video on how you can trade these with a very foundational, if you were, rule set, but it's a basic rule set. Okay, it's not going to give you the highest RR in the world. It's not going to give you the most consistent entries in the world, but it will give you profits if you apply it consistently. This is down to the order flow nature of the market and the way that the banks move their money around. You will see this. But the key element is to identify the larger time frame structures, which is what we're going to lead on to here. So we've now covered 3 points within these 5-minute range structures. So how can we validate a break of a high or low? Well, we know the answer to that. We need to see at least one candle body a close and open above that level. Now, it cannot sit on the level. It has to close above. It cannot close on the line. It has to close above it. Again, whether it's 1 point above, 1 pixel above, it does not matter, as long as it's not touching the same point in price that your high or low is touching. Okay. The high or low can only be established once we have a break of a previous range. Now, whether that's a break in the same direction as the previous range or counter, it's going to hold the same amount of value for you overall. When you're finding a high or low, it must be a wick within the 5-minute time frame that is higher than the previous candle and higher than the candle that comes after it. That's for a high. The low must be a lower wick than the wick that comes before it and the wick that comes after it. Again, that is a 5-minute low. You can also establish a high and low wick, and it can be tested and wicked above. It can even be partially closed above. So for example, like so, okay, and you're still within this 5-minute range. Okay, like I say, once you've watched this video, apply this to your charts if you're skeptical in any way, and you will soon see how powerful this is. So now that we've covered the basic points of how to do this, we're going to go down to the charts now, and we're going to show you exactly what this looks like on a real price chart. Of course, there are going to be some choppy points in price. There are going to be some points where the 5-minute ranges will break up and down in different directions. Generally, that will only happen during the following: low volume trading periods. So for example, Asia, the ranges don't normally hold as well as they would during New York, London. High impact news, of course, news always loves to mess up your technical points. And then the only other time it's going to shift is if you have pairs that hold very low liquidity, so your exotic pairs. Apart from that, you're going to see these structures hold fast a lot of the time. Now, once we've finished talking about this down on live price, we are going to cover the next element that we're going to be covering in our next video, which is manipulation points, otherwise known as swing points. Again, that's for next video. So let's get down to live charts and we'll show you exactly how you can begin to start reading 5-minute order flow. Right guys, welcome down to the live price charts. Now on this chart, we are going to walk you through exactly the points we have just covered in the diagram section. And now we're going to start putting them into practice on the live price. Now this is euro to the US dollar on the 5-minute chart, of course, and we are going to be showing you how to read the major order flow. Now, this is price action from the 24th heading into the 25th, I believe, or maybe just 24th. So it's early hours of the 24th, and the day of recording today is the 27th. So we haven't, gone back miles. We've just stuck within the general vicinity of where we are at the moment. And what you can see here is that we had a short-term break down after price came and took out a high. So we've had a bullish to bearish movement here. We're not going to cover that exactly in this session. We will brush over some of the points regarding that when we meet these points in price. But in this session, we're going to predominantly just go over the 5-minute high and low order flow. So as we stand at the moment, we have had several internal movements within this range, and we have now finally seen a full body close outside of our high. So we know that the order flow that was persisting previously is now coming back into play. So of course we have to wait for our high to be established. So let's wait for that high to be established, and then we can identify our new range and our new low. Okay, so immediately, I didn't think it was going to be that quickly, immediately we have established our high. So we have the previous candle, which sits lower than this candle this wick right here, and the next candle sits lower. So we know that this wick is our high. Now the low must be situated below either the high or low that you are breaking. Okay. Now the reason for that is because it's using investments and the understanding that price is being shifted due to an investment. So we can't have a low that sits here and say that this is the low responsible for this break structure, when this low was established after the structure was broken. So we would generally need to see one that is lower down than the low that is broken. Now the reason I say generally is because sometimes they form at the actual high or low itself. But again, there are going to be different scenarios that are going to pop up that may challenge your understanding of this, but generally the same rules are going to apply all the way through. So now we can go down and we can find our low, and our low is right here. So we now have our new 5-minute range. Okay, very simple. Now currently we are bullish. So if we continue bullish, order flow is continuing. If we shift bearish and we break a low, then we have a point of manipulation, otherwise known as a swing. We are not going to go into detail about the swing points in this session, but we will brush over them when we get to them. This session is going to follow on to the next video, which is going to be points of manipulation, which are swing highs and lows, and we're going to go into more detail about those individual points within the market as they represent higher time frame order flow and higher time frame structure. So next point here, we want to look for our high or our low to be taken. Generally we would have a bias more towards the upside because of the way that price is moving currently. You can see how this represents the bullish. Again, that was obviously a bearish range. You can see the bullish order flow coming out to where we are now, and now we're sitting in between the high and low. Okay, so let's move this forwards. Now remember, your high and low can be tested without being broken. That's completely fine. Now we are during Asia here as well, so we may see a deviation. But until we break out of the high or low, this is the range we are sitting within on the 5-minute chart. Okay, so we're testing and we have just had a full closeout above. So straight away, our first bullish range has broken up. Exactly what we want to see. Perfect. Now we need to wait for our high to form. Beautiful. There's your high right there. We now have a new bullish range. We can see this is our low, as it is the last low created prior to the break of the high. So we now have a new 5-minute range. Pull this out of the way. Now again, we'd expect the high to be ran here. Now in this case, we have ran the low. Now you can clearly see this is a high impact news event, as movements like this generally do not come within the market unless there is a fundamental factor at play. So in this case, we have now established a swing. Now we're going to label this swing high, but we are not going to go into detail about this point. That will be in the next video, as stated earlier. We now need to establish our low as we have broken out here, and we have closed out. If we actually zoom in down here, we have closed outside of this range, so we have now closed bearish. So we can now track the bearish price action, wait for our low to form. There's our low. Perfect. How do we know this is our low? Well, the wick sits lower than the previous and lower than the one that follows, therefore giving us a new low. Now we have a new 5-minute low. We would expect price to go down. Why? Well, this is a bearish range. Again, not broken until we close out fully. Still not broken until we close out fully. Allow price to play within these parameters here. Still within the range. And we've closed out. Perfect. So we've broken lower out of our bearish range. So now we need to wait for our low to form. Until the low forms, we cannot find the high. Again, still no low. Still no low. There's your low. Perfect. Now we can highlight this. We can find the previous range right here. And then we can find our high that caused the break of that range. And you can see it sits right here. Therefore giving you a new break structure to the downside. So far we've had a bearish range that broke bullish. We've had a bullish range that broke bullish. We've had a bearish range that's broke bearish. Now we've got a new bearish range and we'd expect to break bearish. Wait for the closeout. Still no closeout. Okay, let's get a little bit of speed on here. There we go, we've closed out perfectly. So now we have closed lower outside of our bearish range. Now, of course, this price action is not ideal. We know this. This is fundamentally driven price action, very slow to the downside, but we've broken out right here. So let's wait for our low to form now. Good. There's the low straight away. And if we pull this across, you can see where our high sits, which is right here. So we're actually testing that high currently. So again, this is a bearish range, so we'd expect it to continue going bearish. And we closed outside of it again, so we've gone bearish again. We now know that we have a low right here because we formed the low immediately. And we have a new high, which is this high right here, which was formed prior to the break structure. Okay, let's make sure we've got these exactly in the right place. And we would expect this again to go bearish. Price goes bearish again with a close outside. We now wait for our low to form. Beautiful, forming almost immediately. Now, of course, we would prefer to see slightly larger ranges because it shows that there are larger investments coming into the market. But the ranges are delivered as the market wants to deliver them. So you have to just take what you're given and stick to the rules. Same thing here. Now we'd expect price to run lower. Now, often what you will see within these ranges, not always, but a range will be established, price will pull back, then it will continue down. Not always. These ranges are very small. They're not ideal, but they are still consistently playing within our rules. Again, we have broken lower. So you start to see how we've had almost 5-6 ranges now in a row that have broke in the direction that they're established within, which is the main point that we need to make sure we are following, as this is the order flow of the market. So let's find our new low now. Perfect. Now we have another new low. And you're probably already picking up on where the high is. Pretty simple. New bearish range. Again, let's just tuck in our old points here. Notice what's happening here, and this is what we always teach you with every aspect of the principles we teach. is when we are moving down, the highs will remain untouched. Yeah? When you're moving down, the lows are being liquidated. Okay? So let's continue to play this here. So we'd expect it to go bearish again. And again, there it goes. So again, we have broken lower after how many ranges now? 1, 2, 3, 4, 5, 6 ranges consistently moving in the direction that they are established in. Now, I was about to highlight this, but what would be the issue there? Well, we don't know if this is going to become the high until we establish our low. Now, obviously, if there is only one high within the range that you have broken, then it almost boils down to it must be that. But establishing your low first in a bearish trend is always going to pay its dues, especially in your choppy price action. This price action is not as choppy as I remember it being, so it's actually quite clean here, but you are going to see examples of some very choppy price action. So let's just check and make sure that this is not the high within here, as I believe it could be. It is the high within here, so you can see right there, that is actually our high, not this high. That high right there, okay? So same thing here. Now, of course, when you have just 2 candles that make up this range, you may say to yourself, well, I prefer to run off of the higher high, which is completely fine. If you want to run it off the higher high, you can. Using these rules that I'm teaching you though, it should be this high right here that's selected. So again, we are still bearish. We expect bearishness. Okay, we've closed out above. Perfect. So we now have our first break to the upside. Okay, after a lot of ranges to the downside. So we now have a swing low here. Okay, so we can mark that as swing low. Now what we're going to do before carrying on, we are going to zoom out slightly and we're going to show you why we track these and how they become part of the larger infrastructure and framework that we use to trade larger time frame narrative with smaller time frame order flow. So let's zoom out and remember what we put in right at the beginning. What did we put in? Well, we put in a swing high, didn't we? So we now have a swing high and a swing low, which tells you that you have an hourly high in most cases, not in every case, and an hourly low. Now I will go out to the larger time frames and show you this. So we have established a low on more than likely the hourly time frame, and we've established a high. Okay, so let's go to the hourly, and you can see right there, without even glancing at the higher time frame, we already knew this. We have an hourly high right here, and we have an hourly low right here. Okay, of course there are going to be coincidences where they're not going to be exactly the same, and they are going to be messy, and price isn't going to be this super clean. Again, we didn't necessarily cherry pick this because of its clean price action, because this is how we track price every single day of the week. And if you do want to be a part of our live streams where you see us doing this live, link down below is where you need to go for the Discord community. Now, at this point, we would go and elaborate a little bit more into the points of manipulation within the 5 minute, but we are going to save that for next video as we stated earlier. So for now, we will be looking at price to push into this higher area before going down. The only thing that we are taking note of here is that the price action is predominantly bearish, so we would expect price to continue going bearish after a short period of pushing up. Let's see where our high forms. Okay, so our high forms right here. So we don't have the strongest break of the 5 minute, but it is reasonable. Now right here, we're going to follow this back and find our 5 minute low, as this is our swing point, so the lowest point after manipulation, but the actual low for this range is situated just above it. Okay, so we would like to see price go bullish again here, remembering that we are predominantly bearish right now and we've broken down from a high impact news event. Let's see how price reacts at this low. So tests it once, Again, high volume comes back in. No break just yet. And we've broken down. So we had 1 point of deviation. We also have a broken swing low. Again, we're not going to go into the details of that today, but it will come. So just bear with us, and we will show you exactly and everything that you need to know to trade this system. So when we establish our low, we can then find our high. There's our low. Perfect. We've established our low. Now we can highlight that and we can track it to, let's just put it as 5-minute range. We can now track it to our high. So if this is our low, where's our high going to be? Well, our high is going to be right here. As you can see, that is the high created prior to the break structure. Okay, so let's play this now. We'd expect price to go lower again. Beautiful play within a 5-minute range, pulling back to fill the inefficiencies and continuing to the downside. We wait for our low to form. The low is the same candle that caused, so actually I called this a little bit early here. That's my mistake. It's something that we need to make sure we don't do. I called this a little bit earlier, as at this point we hadn't actually closed out fully below this. You can see this candle actually formed within the 5-minute range. It's only now that we've closed out within this bullish candle that we have actually broken. So now we have to wait for our low. So again, it shows that you have to really pay attention to what you're doing. When you see a movement like that, it's very easy to do what I did there and go, oh, amazing move down. You know, there it is. In reality, we're still technically within that range in terms of tracking the order flow. Okay, now we aren't because we've closed fully out, so we need to wait for our low to form. Okay, so this becomes the low of your range and the high of the range is here. Now again, some of you may look at this and say, well, hang on a minute, why was this not the high and this isn't the low straight away? Well, this low point was established prior to the close outside of this 5-minute range. Okay, so now we need to wait for this to close lower. Well, it might not close lower. That's what we'd expect it to do. Okay, perfect. We close lower again. Brilliant. So now we've closed lower again. We can find our low right there, and now we can track it back. Find the high created prior to the break. Right here. Now we have a new 5-minute range. What direction is this 5-minute range in? Bearish. We close outside. Do we close outside? Yes, we do. We close outside again. We need to wait for our low to form now. No, they're equal, so we can't count that as a low. We still need to wait for a low to form. Still waiting for the low to form. We've now pushed back up into the range within here, okay? Now this, in a sense, may look like a low on some brokers, so there may be some deviations between whether this is a low or not. As it stood, we would have had our high here, and our low would have been here if it was generated, okay? Now in this case, we don't have a low, so we just can't establish our range now. We just need to wait for either price to push down lower than it was beforehand, or we can wait for price to establish a completely new range altogether. Now let's just play this and see what it wants to do here. Now remember, this is like an hour within the breakdown. It's like, it's not a huge amount of time where you're not going to know where price is situated within the range. And also these scenarios are very rare. You don't see this happening very often. So we'll just wait for this to play out here. Okay, notice what price is doing as well. It's pretty much moving sideways at this point. Just need to wait for this to play out here. Again, just purely sideways right now. still playing within this honestly dreadful price action here. We have this high and this low, which isn't our range, but this is where we're playing within at the moment. Okay, so as it stands, we don't actually have a confirmed range. Now, if we did have a confirmed range, what we would have, and again, this is going to show you what I mean about low volume trading periods and the reason why the 5-minute ranges sometimes don't consistently deliver a bias like this. We were fully bearish. We had one bullish bias. We were fully bearish until this point. So let's say that we did establish this low. Again, this is an example of some of the things that may come up when you are tracking this. Let's say this is the low right here. Okay, we would have tracked this back to the high, which is here, which would have given us technically a swing low right here. Okay, we would have also established a new 5-minute range, which would have been here to here, which then would have been broken down as well. We then would have come back up and broken higher. So you can see the way it broke up, down, up, down. So it's not delivering efficiently. There's a reason why that low wasn't established in the first place. So we still just need to let this play out here. Now, of course, at this point, you could establish your own range and say, well, I like the idea of this 5-minute high being an established structural point. This low was the original low that we spoke about a second ago. We've broken that down, and we can then begin to establish this breaking higher and track the 5-minute ranges accordingly. But generally what I find is just wait for an expansion either above your previously confirmed high or wait for a clear structural expansion lower than the point that you had right here. So you essentially give your range an extension. Like so. Again, this is not very common that you're going to get this. Just wait for it. There we go. Perfect. Right, now we can start tracking our ranges again. So in this case, we are not going to use this high as our high. We are going to follow it back to this high. Now the reason for that is because we're using an extended range, as I stated earlier. So we're going to give a little bit more of a leeway when it comes to this right here. So that is your new range, bearish overall. And we would wait for price to do its thing. Again, perfect. This is a perfect play out into the inefficiency, breaking down out of our range. And now we're backtracking the ranges again. Finding your high. Only reason we're finding the high is because we have what? Established our low. We know that we're bearish again. Are we going to break bearish or are we going to go bullish? Now we broke bullish. Now again, this looks like pretty choppy price action. This is New York, so you do normally see a spike in volume. So we now have a swing low from our lowest point here, because we know that we've changed order flow, therefore there is a high level of investment within the market. And we can begin to look for our new range. We've broken this right here. Did we establish a high outside of here? Yes, we did. Right there. Where was our low? Well, our low was here. Okay, now we're in a bullish order flow. We broke bullish and immediately broke down. Now, there are going to be some confines that are going to change what this means, but you'll need to understand the principle of swing structure before you can really start applying this efficiently. But tracking the 5-minute ranges efficiently and knowing how to do it with confidence is going to be essential before learning the swing point element or the manipulation point element. So we're going to track this for a couple more minutes and then we're going to go back to the diagram section and discuss where we're going to lead on from this session. So right here you can see we broke above this high, which gives you a low of here, which has now been broken. And it gives you a high of here. So you can see what's happened here. We've had a reasonably big expansion to the downside, with then another expansion to the downside. We then had a short period of bullish price action. We've now started expanding lower. Now, for any of you that have been in any of my live streams, any of the YouTube videos, you'll notice it's something that we do a lot. Now, again, I don't know if this plays out or not. I've been trading this price action over the last couple of days, but I can't remember this exact point on Wednesday at 5 o'clock. But you'll notice that a lot of the time we will do this. We say expansion, pullback, expansion. Now, if price is going to follow that narrative, we should indeed see another expansion lower here, as we have had a very consistent and efficient pullback within a very impulsive and momentum based range that has been delivered. So let's see what happens here. We broke down, we established our low right here, we established our high, and let's see if price continues to break down. Let's get these out of the way here. It may not, it may go bullish and prove me wrong. If so, so be it. Okay, so we broke down again. Beautiful. Let's wait for our low to form. Okay, still no low. There's our low. Beautiful. So we know our low is here. We know our high is here. So before we continue on, I just want you to think about how many times we have told you a range is bearish and prices continue to go bearish. If we follow these back here, there's only been a small point of deviation, which was here. This was the only time, except for over here, that we have seen price deviate. All the way from up the top here, we were bearish, bullish, bullish, bearish. Then we continued to go bearish, 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 bullish, even though we had a bearish range. Then we've gone bearish, 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 bearish. So you can already begin to see the probability is always going to be on your side. If you are consistently tracking these ranges, you have a much higher likelihood of knowing the direction within the 5-minute structure, at least, where price is going to go. So new high to low, we'd expect it to go bearish. There it goes. Trust me, you'll get bored of doing this. So we now have, let's work out if we've got our low in here first. So we need to establish another candle and another candle. There we go. There's our low. Perfect. Okay. So we now have a low and we have our high. Beautiful. What direction is the orders flowing right now, or are the orders flowing right now? Well, at the moment we are bearish and we'd expect this to go bearish again. Testing the low. Testing the low. This is market close. Yep. So this price action wouldn't be included within the true price action and true order flow within the market. But notice something here. If we're using the 5-minute order flow as investment indicators, essentially, so we're finding an investment high, waiting for it to break down, and finding an investment low, so we know that the money is situated here and here. If we're not investing due to market close, where would price stop and be stuck at, essentially? Well, the low or the high. And you can see this visually playing out here. Now, this isn't going to be the case every time, but you can see it in many scenarios. When you go back and test this and you become consistent at it, you will see how often this works and how much confidence it will give you when it comes to understanding directional bias within a 5-minute time frame. Now, we're not going to count this as a break because this is still within market close here. This is 11 o'clock, so we need to get out of this before we can actually count a true break structure. There's the break structure. Now remember, we are within Asia right now, so we need to zoom in a little bit as we have very low volumes right now. Okay, so there is our low of our new range, and I was going to highlight this, but why would that be incorrect? Well, it's not situated prior to the break structure, so this is our high right here. Now again, we would expect price to play lower from this as we are in a bearish order flow situation. Now in this case, we have closed outside of this high. Now notice one point that I gave you prior to starting this was what is one of the main points that you may not see this system working very consistently, and that is during Asia. We are within the Asian session now. This does not mean that it won't play out and work, but we will see from here. Now we will make this range the last range that we are going to track, as I would like to wrap this up without keeping it too long for you, as I feel I have given many examples of tracking highs and lows, waiting for the breaks, waiting to establish our given structural points, and then finding the direction that we expect price to travel in. So let's play this out and see where it goes. This is a bullish range now, by the way. Let's see. Do we go higher? That's the question. And the answer is no. But as told earlier, the Asian range is the least consistent for this. Overall as well, we know that we are predominantly bearish. We've seen several bullish pushes to the upside for short periods of time prior to continuation of major order flow. We know this as well because we're establishing swing low, also establishing swing low, and what's happening to these swing points, they're being broken. So we understand that the hourly structure, like we spoke about earlier, if we have a swing low, it is being liquidated, meaning we are traveling down. Yeah, we established a new swing low, we liquidated it, means we're traveling down. So we wouldn't want to necessarily go bullish within this pair. If we're running swing lows or we're running points of manipulation in a certain direction, we should try and follow that. So guys, that wraps up the example of how to track the 5-minute order flow within any market. Now, this is going to provide you with clarity across a larger time frame understanding, and it's also going to give you a lot more confidence on this time frame for the direction that price is going to travel in directly within your trading session. Now, of course, there is no 100% strategy within the market. This is not a trading strategy, it is an order flow tracking system, and it is going to give you the ground foundational points to track the larger time framework that we are going to explain to you guys and help you become consistent at trading. So before we wrap things up, let's just cover what it means to us when we have points of manipulation, so aka order flow changing within the market. So let's say that we have a bullish established order flow. We're tracking our 5-minute ranges, we can see it running higher, and then all of a sudden we have a push higher which ends up breaking down. Now what this tells us is that we have a large amount of money flowing into the market from this high. And the reason we know this is because we have ran smaller time frame lows. Generally, if we run more than one, it's going to be even better, okay? Now what this tells us is that our high has actually been protected, meaning that there is a high chance we could see price pulling back and continuing down, now taking lows and protecting highs. The opposite to what it was doing within a bullish price action movement. Now on a higher time frame, this represents a swing point, and this swing point is going to be used to define your higher time frame ranges. So we're tracking 5-minute ranges here. Points of manipulation represent your higher time frame ranges. Look at it as your wick forming within your high or low. Okay, and this then allows us to say, okay, well, if we establish a high right here and we have, let's say, a low down here, we know structurally price is moving to the upside. So when we track these ranges, if we find that one range breaks in the lower half between these manipulated points, we can then expect to track bullish price action higher out of here, therefore establishing your higher time frame structure, but giving the 5-minute time frame more detail and more understanding for you to use and capitalize on. So guys, that wraps up today's session. This is going to follow over into Swing Points 101, how to trade swing ranges, identify swing ranges, the probability of them, and how you can begin to capitalize on them. We are then going to go over into C-swing, the SE system, and overall liquidity trading to give you the framework as a whole that you can then use and begin to practice and apply to your trading. So if you have enjoyed this video, guys, make sure you hit that thumbs up. Make sure you drop us a comment down below. Of course, if you have any questions or you'd like to learn this live with us, as stated earlier, the Discord link is in the description. Make sure you hit that and join the community. But until the next one, guys, have an amazing rest of your day, rest of your week, and stay safe. I will catch you in the next one. Peace.